The market is actually falling pretty hard today, down 1.25% by the time that I'm watching this with you. I'm a professional investor competing in the US Investing Championship. My trading plan is linked down below. This trading plan has held me in cash while the market is getting absolutely monkey hammered. That's why I like that is a technical term, right? Developed by the mostest smartest strategists in the whole world. Not me. But the market is getting absolutely monkey hammers today. However, we've been sitting in cash and not effing up our portfolio, right? That is the point of sitting in cash and not effing up. When the market is not working, you get warning signs. It had this order block. It had these moving averages crossover. It had the sell signals, right? Everything that you could want to know about getting out of the way has been presented to you. Random guys on the internet like myself have been telling you, now is not the time to be getting aggressive. I hope that you are not one of those people who said, this guy didn't know what he's talking about, who bought SoFi. And SoFi, the greatest stock in the history of mankind, of course, is now down to $18.09, which is the same price that it was in July of last year, which is the same price that it was in December of 21, in July of 21, May of 21, March of 21, and January 2021. So if you bought this 5 years ago and you're still holding SoFi, guess what? You've made nothing.
It's all there, black and white, clear as crystal. You get nothing. You lose. Good day, sir.
That's it. Nothing. Absolutely nothing. The objective when you trade is to get in while it's going up and get out of the way as it's going down. Mahesh and I were talking earlier this morning doing some marketing stuff. Mahesh is our CEO, for those who don't know. And he's like, whatever happened to that one guy who wanted to do shows with you? What's his name? And I was like, oh, Tom Nash. Yeah, he's the guy who will buy stocks. And Tom, I hope you're watching this. He's the guy who will buy stocks to, quote, hold forever. Why? I don't know. Because you believe in the company? Dude, you can believe in the company all you want. One of his favorites is Palantir. Let's go to Palantir. You can believe in the company all you want, but you probably aren't believing it very hard when it's down 40% from all-time highs. In fact, you know what? Surely this whole platform thing, this trading intelligence platform that Chris talks about all the time, surely, there's no possible way that it had a sell signal that would have kept you out and kept most of those gains. Oh, wait. January 2nd. Let's find that. January 2nd, right here. So from January 2nd to today, it is down 30%. I don't know. I feel like the 82 cents a day to have OVTLYR definitely would have been worth it if you were such a Palantir bull like Tom Nash, right? Looking at this stock right here, I feel like it would have been a good deal had you known where the sell signals are so you get out of the way. But I don't know. I'm just a random guy on the internet, right? Again, all stocks are bad. But every once in a while they act right. Right now, the market is not happy. The market's not happy at all. I was looking at the S&P 500 map over here. A ton of the sectors are blood red. The tech sector, only Apple and Nvidia are holding it up right now before it just washes out the entire market. And they're up just barely. They're eking out something. The financial sector, totally dominated. Communication between Meta and Google, Netflix getting crushed to death. Consumer cyclical, right? This is your discretionary. Everything's getting wrecked. Industrials, totally destroyed. Healthcare, utilities, and consumer defensive. So your staples, healthcare, defensive, and healthcare, staples, and utilities are the only things that show any sort of green to me. That's not good. That's not good at all. But, and I got to have you understand, right? If you're going to put any money in the market at all whatsoever, you are obligated from that moment forward to be as defensive as possible. If there is any reason at all to get out of the way, you need to do it. And I've been telling you guys this for a hot minute. The market is not looking happy. We had the 10 go under the 20 on this candle right here, February 12th. Now, it's gone volatile sideways since then, and it's still at the same price as it was in October, volatile sideways. So we're going to watch this video about the S&P 500 breakdown confirmed. Tariff chaos, NVO explodes, gold is rallying. What's going on with gold? Gold got a buy signal last week, by the way. I'm going to take a look at gold. Yeah, gold's on a move. Let's go look at gold real quick. GLD. Let's see. There we go. That buy signal right there on gold. I don't know. I feel like it's already printing. I feel like it's already printing, and it just crossed this order block right here, which is exactly what I would be looking for. Now, in my trading plan, it doesn't involve gold outright, so I'm not trading it. However, it might be the right stock for you. Let's watch this together.
My name is Gareth Soloway, and I was a losing trader until I mastered technical teaching plan. Of course, I am Gareth Soloway, Chief Market Strategist here. Now, in today's game plan, we're going to be looking at key trading levels, but we first have to start talking about the tariffs that were implemented over the weekend. So remember, last week, the Supreme Court, basically struck down the initial tariffs that the president put on a lot of these countries. But then over the weekend, the president put a 15% blanket tariff across.
Yes. Hang on. I feel like Derpy Joker has a little bit of Trump in him. Hang on. Derpy Joker tried to take his jacket off. Yes, the Supreme Court says there's no tariffs, but I'm going to make the tariffs anyway. They're not tariffy tariffs. They're so similar to tariffs that they're not exactly tariffs. That's what's happening right now. I'm just saying. Like, we all knew this was going to happen. Why was anybody surprised by this?
Across all nations. Now, the issue here and why the stock market is trading down today is the uncertainty. So you had deals with various allies where rates were less than 15%. We had trade deals left and right? And now what we're seeing is this is the only way the president can impose it is by doing a blanket tariff. So then you have other countries that are now saying, wait a minute, we struck a deal for 10% tariff, but now it's a blanket 15%, even though we had a deal with you, the United States. And so these are causing issues here. And the market, again, it's the uncertainty. Markets do not like the unknown. Is it going to escalate? What's going to happen? How about these refunds potentially? Is there going to be a refund for?
Well, what's nice about that is if the markets don't like uncertainty, that's fine. It's really fine, right? You need to take that approach, right? I don't care. And I mean this when I say this. I don't care what the news is. I'm only concerned about what prices are doing. Okay, if prices are going up, I'm very interested. If prices are coming down, I'm not going to be there, right? All stocks are bad. Every single stock is bad, but every once in a while it acts right. The market is not acting right now, which is a huge portion of all stocks, right? The market, 40% of the move is due to the market. If the market's looking great, you're looking awesome, right? That helps so much. That puts the wind in your sails. If the sector is looking great, that's what you're looking for. That's 30% of the move. And only the last 30% is due to the stock itself. That right there, my friends, is exactly what you're looking for. And a lot of times, you don't have to do anything. The volume is a little low. Unfortunately, there's nothing I can do about it. He uploaded a very low volume file. It is a thing on YouTube, and I've got my volume turned all the way up on my side, unfortunately.
All of the revenue that was accumulated that needs to go back to either the U.S. public for the higher prices that we paid or to these companies that ended up paying the tariffs. Lots of uncertainty. Bottom line is the stock market this morning is trading down, but off of its technical lows. Let's take a look at the S&P 500. And
by the way, this is the same guy who a few weeks ago, maybe 2 weeks ago, was screaming how the path of least resistance was down. And maybe he's going to draw whatever he draws here in a minute. But at the time, the market was actually trending up. Now the market is trending down. Okay. So you've got a market that's trending down, a market with a sell signal, right? You got your sell signal right here. And then we go into market breadth and give that 2 seconds to load. We can see over here, market breadth has been getting weaker and weaker with more and more sell signals, more and more sell signals. Now I did see a tiny tick up in uptrends. That's very interesting. But overall, the number of buy signals versus sell signals is getting worse. So as of today, I'm in agreement. The path of least resistance is now down, and I'm only basing that on what I can see, and I'm not trying to predict the future.
You can see here very clearly is that last night, the futures opened at 6 p.m. This was Friday, by the way. So again, we had that inflation data, by the way, that was much hotter than expected across the board. And I'd warned about that, if you remember. When we got the CPI about a week earlier, I said, guys, there's some data missing here. This is not a complete picture. And remember, rent and housing costs are 30% of the CPI data. It's not the greatest indicator, all right, of inflation. The PCE data is favored by the Federal Reserve for a reason. It's a much broader view of inflation. And sure enough, inflation per the PCE data is moving up. So that was already a negative on Friday, but then the Supreme Court striking down the tariffs was a positive. Could inflation come down because the tariffs are no longer intact? Well, guess what? Today we're seeing 15% blanket tariffs. So that inflation is not really going to come down if the tariffs are still in place to some extent. And so what we're seeing is in the overnight, we had a pretty sharp drop in the S&P futures. We have rallied back. Buy the dippers are coming back in a little bit here this morning, but we're still, again, setting up from where we closed on Friday to be opening decently lower across the board. All right. Now, if we flip to the S&P daily chart, the S&P daily chart itself, there's really, again, no change from what I've talked about. Okay. You guys know that ever since we were at the upper range of that parallel, I was warning and saying, guys, the upside is limited based purely on technical analysis here. All right. And remember, verify.
Hold tight. No, sir. You specifically said, because I remember receipts are on YouTube. Receipts are on YouTube for you too, my friend. You specifically said the path of least resistance is to the downside. That's what you said, my friend. You're more than welcome to debate me. Fortunately for me, if you deleted that video, I have it recorded on my side. I have the evidence. You said the path of least resistance is down. With your and I don't like technical analysis being used in this way. Star reading, moon watching, astrology is a better way for me to interpret things like the monkey donkey upside down cheesecake pattern. It's super bullish, right? Let's be realistic here. All that matters is price, okay? If the average price over time, your 10 EMA means your 10-day moving average, your 20 EMA means your average price over the last 20 days, and the 50-day moving average is the average price over 50 days. If that, my friends, is moving in one direction or the other, that will signify the actual direction of the market. Yeah, I don't know. Just grinds my gears when somebody says my technical analysis is saying this or that. I don't know, bro. All I know is that I can't tell you magnitude nor duration, but I can sure as blazes tell you direction.
Investing is all about charts and no BS. Like, what are the charts saying? Because that's honestly the purest form of information we have. You go to social media, you get all this ridiculous hype. People are telling you that, Bitcoin into year end of 2025 was going to 250,000. Obviously didn't happen. We heard that silver was already going to be at $250 an ounce. That didn't happen, right? So there's all this hype out there, but the charts are so pure. They have no agenda. They have no bias. It is what it is. And so that's why we...
I don't know. His love affair with charts is kind of gross to me. It's a history book of the market, right? It is the history book of what happened in that day. These are the lows, these are the highs, this is what happened over X number of periods. That's what it is. Let's not get romantic about it.
Use the charts because it allows us to be the casino versus the gambler. All right. And that's really, again, putting odds in our favor. So when we were up here, right, we have this bigger parallel on the daily chart of the S&P.
Dude, I'm not joking when I say the last time that I remember watching this from his channel, he had drawn it in a way. Yeah, I don't know how long it'd take me to find that video. He had drawn it in a way where there was like a line over the top, and that's why he was saying the path of least resistance is down, because I drew that line right there, so therefore the path of least resistance is down. And this is why I will follow mathematical trend lines, but I'm not going to follow trend lines that you, me, or Mr. Gareth Soloway draw on a chart, because of course they're a little bit subjective here. I feel like he manipulated his line just a little bit to match his narrative.
This is where, again, even going back to October, I kind of said, guys, markets are tapped out here. Now, listen, we haven't really fallen sharply since then. If you look at that, we're virtually at the same levels we were since October currently. But the market, again, for me, this is distribution. Retail continues to generally buy in, thinking the markets will never go down. Why haven't the markets gone higher? Number one, the technicals. Number two, institutional distribution. Number one,
the technicals. The technicals are telling you. The technicals, my friends. I really didn't want this to be like an attack on him. And granted, I'm sure he's a super smart guy, super sweet guy, of course. He definitely knows how to play the YouTube game. But the technicals aren't anything. It's just whatever you drew on the chart, my friend.
Distribution, aka selling into the retail buyer, keeping the narratives bullish. The institutions, remember, they want to keep the narratives bullish, because if they don't keep the narratives, like the market will never go down narrative.
Oh no. I don't know how much we're going to come back to this channel, because he's now saying the theys. Did you hear that? The theys. They are trying to keep you down. They are trying to manipulate investors. They are out to get you. The big almighty they. Scrooge McDuck in his money bin is looking down upon retail traders, and he is the they. They are trying to keep the narrative. Oh my gosh, this is getting ugly.
Then retail won't be buying in, and they can't offload their shares.
They and their shares. Really? Really? How about we just look at what's going on? How about we say, okay, we got a downtrending market. Okay, that's it.
Right? So you have to look at it and understand that aspect. But ultimately, we have some issues that are concerning. Number one, upside's limited because of the parallel. Number two, we have this upsloping trend line that has now broken. We saw that break here. We hit it here, here, and here. Then we broke, retraced, and now we're chopping. And we're still keeping an eye on the head and shoulder pattern that I pointed out last week. You have your shoulder here. You have your head.
Patterns. They always work. Every time. Every time patterns work.
Here, and you have your secondary shoulder there. Now, the neckline has not broken yet. Here's the neckline. This has to break.
All right. Meaning lower lows, right? Meaning a downtrend, trending down. There you go.
But if this were to break this week, you then have a downside target, which would be down in this range on the S&P.
Okay. I don't like, this is his target that he just circled. Do not, under any circumstance, put any sort of target, because you're behaviorally locking yourself to a certain level, right? Imagine you saying upside target of, I don't know, 600 on SPY. It can't go higher than that. And SPY's like, hold my beer, as it just blazed through 600 all the way up to 700. Hold my beer. You can stay down here at 600. I'm going to go on without you. Targets are meaningless. You're anchoring to a point that means nothing other than your bias. I really didn't want this to be that kind of video. I wanted him to actually like talk about what he sees out in the market, because I don't keep up with macro at all. I don't think I can explain that. I don't keep up with macro, yet I'm a profitable trader. I've made $4 entire in the market. You don't have to stress over any sort of news. In fact, OVTLYR does all of this automatically without you having to do any sort of fundamentals or news or anything else. You'll just know, hey, I got the sell signal. Hey, the market's looking pretty bad. Hey, the sectors are not looking so hot. Maybe I should get out of the way, versus all this hot baloney garbage. Oh, don't forget the head and shoulders.
Just below 6,600. That would be your next stopping point for technical support. All right, so I'll continue to keep you guys updated.
Stopping point, people. Stopping point. Don't you dare go any further than that, my little baby boy SPY. Don't you dare.
On that. Now remember, yes, upside is limited. We've broken the white trend line that I put in here, right? This one, or this yellow, this secondary yellow trend line. I like to kind of keep my trend lines slightly different color. There we go. So this one has broken, but the head and shoulders neckline right here has not. That's the next trigger for the next leg down in the S&P 500. Okay, so if we flip over to the Nasdaq, much the same. We have the same upsloping trend line. We broke the Nasdaq. Obviously, percentage-wise, is off its all-time highs a little bit more. It never made a new all-time high from the October here. It kind of double-topped right here, versus the S&P did make a new all-time high, even though it stayed underneath its parallel. But ultimately, that's because, again, we've seen the AI fear trade come in, which is, again, a lot of these software stocks. We saw CrowdStrike. We'll look at that chart in just a little bit. But CrowdStrike got crushed on Friday. The fear that AI is essentially going to put out of business a lot of these software players as it becomes more advanced. All right. Now, again, we're still seeing NVIDIA hold up relatively well, but there is issues there where if we break a key trend line, NVIDIA could be due for a free fall as well. All right. Let's take a look at the dollar. The dollar today is fractionally lower, not much going on this. I still think in general we have a little bit of a bearish consolidation kind of flag pattern here on the US dollar from this move down. So this is all inside bar chop. If we break this level, the dollar then.
I wonder if it's like trending up or down, TXY. Downtrending. Yep. I agree. So does math. 10's under the 20, prices under the 50. Now, it might cross over here in a couple days. Does that mean anything to me? Nope, not at all.
Starts its descent back to this recent low. But overall, really, again, over the last couple of weeks, from this big fall on the dollar.
I think it's really important to grasp that a lot of people who want to be, quote, finance bros, which I am and have been for, since 2008, 18 years I've been a finance bro. You don't have to keep up with all this. The dollar and the Japan carry trade and the price of Bitcoin and gold and all that stuff, right? Just gonna do what it's gonna do. It's gonna be what it's gonna be. You don't have to memorize the Black-Scholes model. Just let it play out. Ride the trends while they're there, and when they're not there, just go to cash. Like, I hate to sound so simplistic, but my itty bitty baby brain doesn't allow me to think about all these other things. So, you know, in the comments, I'm sure that there's going to be some really smart people who are watching the replay telling me just how important it is to know the Japan bond trade and how much of a big deal it is. Don't you get it, Chris? Nope. And that's okay. And you don't have to either. You don't have to either. What I'm trying to say is that a lot of people want to overcomplicate what's going on, and you don't have to make it complicated. You can actually make it as simple as you want it to be. You get to choose how much noise to filter through.
Has somewhat stabilized, right? But again, the key here is the forecast in the near term for the dollar, if it breaks this trend line, is a revisit of this lows. Then we have to see if that low ends up holding. The 10-year yield is doing basically the same thing, but it's honestly even more bearish, right? We have the down move here. This bounce has been a very, very weak.
You can go to TNX, and see the exact same thing, right? So I agree, definitely bearish. Let me remove some drawings on here. The last time we were here, yep, going down. But look at this, it's finding some support at this level right here, this outlier block. Boom, boom. That coincidentally, crazy enough, at this exact level, it's bouncing back up. Who would have thought? But I don't have the pattern for it. I don't have the upside down triangle cheesecake pattern for it. But if I did, let me tell you, I would make sure that I fit it to what I wanted it to say.
Weak bounce. What's interesting, and I pointed out this last week, is if you look at how the 10-year yield's behaving, when the 10-year yield has a green candle, the markets tend to go up, versus if you looked 6 months ago, up yields meant the markets were going down. So if you look at the yield,
when you have a green candle, that means the market goes up. What about that one? Or that one? Or that one? Or that one? Or that? Oh, when you have a red candle, markets go down. Oh, wait. Oh, come on.
today it's red. What's the S&P futures? Are red as well. And the idea here is that this 15% blanket tariff, if it holds, number one, it brings in more.
See, this is what I'm interested in. Sure, give me your macro perspectives.
Uncertainty, but if it holds, it weakens the global economy and the U.S. domestic economy because of additional tariffs on countries that we had deals with for lower tariffs than 15%, and it ultimately.
Fat Daddy, I didn't know that green candles meant it was going to go up. I mean, that's new to me. I had no idea. I just learned today that green candles mean go up. Man, if only I had known that.
Could weaken the U.S. economy, which is already it's already a concern to investors because of some of the latest jobs data and some of the other economic data. And so again, a weaker U.S. economy means lower yields overall. All right, let's go to some movers and shakers today. Number one, we have this stock.
This, what my friends, is why we don't trade healthcare. Okay, thank you. Let's get away from like who gives a flying monkey donkey. Like legitimately, here I'm being very honest with you. There are a lot of people who care about the 10-year yield. There are a lot of people who care about the dollar, the DXY. Do you need to? No, not at all. It will make no difference in your portfolio. Let it do what it's going to do. Don't spend any brain space on it. But if you are in healthcare, you're going to wake up to things like this, okay? It's going to happen. I'm telling you. That's why we have completely excluded healthcare from our trading plan, because of bullcrap like this. Novo Nordisk. Okay, so I did look up the news of this because I was interested. And let's NVO. Novo Nordisk released news that, oh man, it was right there earlier. Now it changed. They had a phase whatever trial. Let me see. Let me see if I find it. Oh, geez. I don't know. Anyway, they had a GLP-1 weight loss trial that had a 23% success rate, but it wasn't 25%. Who some other company had a trial on. So therefore 15% must be evacuated from the market immediately. Like, that is how fickle the healthcare industry is. No way. Just don't even put yourself in that risk whatsoever.
Here, this is Novo Nordisk. Novo Nordisk is...
Dude, Patrick's totally right. Here, healthcare, where wins, because it's a 23% win, 23% weight loss win, can become losses for no reason whatsoever. We're going to wipe off 15% of the market cap of this company. We're going to erase hundreds of millions, potentially billions of dollars, because the results were great, but not greater than enough. Oh my gosh.
Is getting crushed by about 15% pre-market. They basically came out with a study on their latest new drug weight loss drug, and it underperformed. It performed less than even Eli Lilly's weight loss drug. And so that stock is dropping today because of that. But in massive sell-offs, what do? We say, okay, well, where are the technicals telling us that there could be a bounceable, tradable level? And if we go to the chart,
no. If you're in a downtrend and it's just sold off really ugly, nasty hard, there is no reason on God's green earth that you need to be looking to buy this stock. The stock itself just told you, nobody wants to own me. You do not, under any circumstance, come in to say, I'll be that guy. Chris James would do it, though. Chris James would be like, now the time to buy the dip. I can't do it not in full costume. I'm not going to go in costume. But here, I mean, like legitimately, if let's compare assets to consumables. I love to do this, right? Asset, a house, right? If your house fell 15% in value overnight, well, let me rephrase that. If the house you wanted to buy, there you go, around the corner, 1814 Main Street. 1814 Main Street just fell 15% overnight. Are you rushing in to buy that house right away? Of course not. You're asking around like, why did this just drop 15% overnight? Oh, it's because the foundation just collapsed. The foundation of the house just collapsed into a sinkhole. You do not, under any circumstance, go after a stock like this. Period. Full stop. I'm not buying this with Gareth's money. No freaking way do you go chasing dips like this, because you don't know how far it can dip. Just like you don't know how far you're going to fall when you fall in the sinkhole at 1814 Main Street. At some point in time, somebody's going to come in, they're going to fix it, it's going to get all better, and the price of that property will go up. But I'm not paying for it. Sure as Blaze is not paying for it. No, ma'am. No, sir. Are you going to be the one to figure out where that bottom is? By all means, you go buy it, but I'm not buying it. No way. This is crazy. This is actual crazy talk.
Charts here, and we flip over to the daily chart. In fact, I'm going to go to the weekly chart. There's this major technical support down here. Look at this, guys.
This doesn't matter. This is from 2020. This is the market cycle. Oh my gosh. Yeah. Stage 1, 2, 3, 4. Do not get in the way of a stage 4 downtrend. The market can stay irrational longer. You can be so. I don't know if I can continue with this video, and I don't know if we're going to come back to this channel again. This is actually dangerous financial advice.
So here we are, and you can see we're right at $40 on Novo Nordisk right now. So we're just above it by a few dollars. This to me is a very good swing tradable level, and I likely will take it myself if it gets.
Go for it, dude. You buy the mess out of that, my friend. You go for it. You go, girl. You buy as much as you possibly can at this $37, $38 level. And you tell me just how much hair you still have left on your head, which, listen, this comes from a guy with 40% hair. I mean, we have similar amounts of hair on your head. How much hair you're going to have on your head after it just destroys this level, because nobody gives a crap what you drew on this chart. Nobody cares where you said this bottom is, and it will continue to go down and down and down until it finds a bottom. In fact, I have a slide for this. Hold on. Holy moly, I may rage quit this in a hard, fast minute here. This is actually brutal. Do not, under any circumstances, do what he's talking about. Like, actually, seriously, stop listening to what he has to say. Okay, first off, I'm in the business of responding, not prediction. Telling the future is impossible and unnecessary. Trading is a now business. Right now, this stock is screaming, I am going down. I'm not going down with that shit. By all means, you can, but I'm not. Hang on. There actually is a slide here that I want to do. Is it there? Here we go. Here we go. Okay, remember, let's say you love this company and you want it to go up and you are such a big believer in the stock. Remember, while you do nothing, less experienced, lesser disciplined, and less skilled investors like that guy are going to lay the groundwork for your success. Let them build the bases and we'll buy the breakouts. Under no circumstances should you even consider touching NVO stock.
Gets down to 38 to 37. The reason is, if we look at Novo Nordisk, it was just kind of going along. It was floating up a little bit. And then you could see right in here, okay, here we kind of went up, rejected, went up, rejected, went up, rejected, and then we broke out. And this breakout zone right here, okay, this was the beginning of the bigger bull move.
Yeah. Remember, when the 10 goes over the 20, price goes over the 50, I can tell you direction. I can tell you for sure that was trending up. I can't tell you magnitude, and I can't tell you duration, but I can tell you direction for sure, all day, every day. That is the direction right there. But there are also times where you might make a buck or lose a buck.
That was basically the weight loss drug hype, right? All the excitement over their weight loss drug. And so the cool thing about this is not only do you have the pivot highs right here, which should act as support, but this would be essentially a...
He said it. He said the most dangerous word in finance. Did you hear it? Hang on, I'll go back so you don't miss it. We're going to rage quit this video in just a second.
Hype, right? All the excitement over their weight loss drug. And so the cool thing about this is not only do you have the pivot highs right here, which should act as support, but this would be essentially a 100% unwind of the weight loss drug. And again, the excitement over it. So at this point, we should see essentially that weight loss premium fully pulled out of the stock.
Dude, yeah, of course. We should see it. Why didn't I think of that? We should go up from here. Trust me, bro. I mean, the only thing that can actually happen. Oh, come on. The only thing that can actually happen is it goes up. That's it. There's nothing around that. The only thing that can happen is that's the bottom. That's the bottom because I drew it there. I'm very disappointed by this video. I thought this was going to be a little bit of a macro take, what's going on out in the marketplace, but it really wasn't. It was more of the same of here's a lot of different things that are going to confuse you and add panic, stress, fear, and worry to you, right? Who cares about the Dixie? Who cares about 10 years, et cetera, et cetera, et cetera, right? All that matters to somebody, but it really shouldn't matter to you. When are you as an investor going to get paid? When the price of your stock is going up. That is it. When the price of your stock is going up, that is the only time you're going to get paid. And if you decide to step in the way of this, why wouldn't you love it at if it was 150 up here and now it's down to 37? I think I lost a week off my life by watching this. If it was 150 up here and now it's down to 30, come on, Clicky. You better work. Now it's down to 37. It's down 73%. This stock is telling you something. You get to choose. Are you smart enough to listen? Or are you too smart for your own good and think that, oh, this is the bottom? By the way, that's the support level right there. This outlier block that he's looking for. That's the bottom, baby. Here we go. Here we go. I wonder how much it has to go up to get back to new all-time highs. Only 276%. Duh. Just buy it. It has to go up. It has to go up. This is awful, right? This is not the way to be successful in trading. I'm telling you, full stop, period, the end of the story. I don't know if he actually trades or just makes videos on YouTube acting like a trader. But I'll tell you one thing. People who are actually successful in the market, they understand the only time they make money in their bank account is when the price is going up. Do you know the path of least resistance when the price is going up? That's right. Up. The path of least resistance when it's going up is up. It is a self-fulfilling prophecy. Trends love to trend, and they will continue to trend until the time where they stop and they come back down. This is your market cycle. Over and over and over again. I got to show it to you guys. Just because it went up in the past does not mean it will go up in the future. If you missed it over here, I'm sorry. It's tough luck. That doesn't give you an excuse to buy it over here because here we go again, baby. No. We're done with this video. We're done with this video. So yeah, welcome to the Outlier Trading Room. This is where actual US investing champions come to trade, not fake gurus on the internet who try to act like they're so smart, right? Mr. Gareth Holloway, I would love to have a conversation with you, and you could tell me just exactly how finding those bottoms like that means you are telling the market that it has to go up, and it listens. I highly doubt that that's the case, Mr. Gareth Holloway, but maybe I'm wrong. Maybe I need to shut up and listen to you, because clearly you know where those bottoms are, and what do I know? What do I know? All right, this is where we help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. We have 3 plans. M is our most aggressive plan. ETF is our defensive plan when nothing's setting up in plan M. There's also plans sit in cash and don't F up, which is where I'm at, which is where I'm going to continue to stay because the market is not working in our favor. The market is still sitting on a sell signal. The market knows all. Other than Gareth Holloway, the market knows all. Let's go over to the SPY. The market is in a downtrend, and don't listen to anything that anybody tells you about this is where it's going to bottom and go back up. Don't do it. I can't tell you duration. I can't tell you magnitude, but I can sure as places tell you direction. And until I decide to be one of those fake gurus on YouTube, I guess I'll just continue to be lacking in views, but growing in my bank account. How you like that? How you like that? All right. So listen, if this was helpful to you, be sure you like and subscribe because we are actually competing in the US Investing Championship in this on this channel. Link down below is my actual trading plan that has actually been back tested that actually makes money. And when there's nothing to do, it's sitting in cash and not effing up. All right. So if you're ready to save time, make money, and start with less risk, click one of these 2 videos. We'll talk soon.